No problem, sir. No problem. Right.
And the office is the funny area. Office the George and MC members and our chairman, Sri Roy Varghese. Good afternoon to all of you. We are going to start our ethics. And from Kolkata, he already joined. He was interacting with us. And for welcoming the next speaker as well as all the participants here, I request Sri Roy Varghese to address the gathering.
Good morning. Good morning. And good afternoon, my dear colleagues and friends in profession. It seems as if in the morning itself, because we are having it a little bit cold also. Friends, today we are having a very important webinar session. New Code of Ethics. As you know it very well, ethics refers to the moral principles or the rules of conduct for a particular group or culture. Accountancy profession is also no different. One definition of ethics which I was very much impressed was that from Potter Stewart. It is like this. Ethics is knowing the difference between what you have the right to do and what is right to do. I know that you all will agree with this. This is what is happening around us. But friends, the objectives of the accountancy profession are to work to the highest standards of professionalism, to attain the highest levels of performance and generally meet the public interest or requirements. The maintenance of ethical standards is the collective concern of ICAI as well as all the members of the profession. The maintenance of ethical standards at individual member level is of utmost importance. However, the human nature being what it is, a man may often place his personal gain above service. Therefore, it is necessary to keep on reinforcing the idea of keeping up and observing the highest ethical standards repeatedly. As you might be knowing, ICAI has revised its Code of Ethics, and the new Code of Ethics will be effective from 1st July 2020. Today, we are discussing here the new Code of Ethics released by ICAI. We have an expert faculty, I should say, an authority on disciplinary proceedings as well as Code of Ethics, CA Arvinder Pal Singh, whom we fondly call as CA AP Singh, to guide us and lead us in the discussion. Friends, we are sure this session will be of you will really enjoy this session and it will update and refresh your knowledge. Before going further, I think I need to have some few announcements. The forthcoming programs will be given, the details will be given by our secretary in detail. You should take care of it because 3 more structured CPE program is coming. I must remind you that you must remain muted till the end of this session. You keep your audio muted as well as the video in off position. Muting the video audio will help others because unnecessary disturbance will not be there. And putting off the video will help yourself because your internet will be more healthy and the bandwidth with consumption will be much less. So you will be able to get much more better audio as well as the cost will be also less. Friends, if there is any queries or questions, either you can put in the chat box itself, or if you want to raise the question, you can very much say that we will call you and at that time you can unmute and your video and audio, and you can raise the question. Yes. Then so sometimes we have seen that your name is not reflected in your ID, which is shown in the Zoom. It is essential because we are generating the report and submitting to the CPE directorate. Unless they know who is there, who was there,
Hello.
It will be known mainly through your name. So please see that if it is not reflected, you edit your the name which is coming in the Zoom meeting and put it in your correct name. As I mentioned earlier, by attending this session, you will be getting 2 hours of CPE structured credit. So please see that you remain there till the end of this session. And before going further, let me welcome each and every one of you to this function, as well as I have great pleasure to welcoming our faculty here today, CA AP Singh ji, to this webinar. Friends, there is a very solemn ceremony to be performed now. For that, we have specifically invited our immediate past SIRC chairperson, John K. George, and we'll be releasing a beautiful lapel pin. It was our offer in our ARS scheme that we will give one beautiful lapel pin to all the ARS members. So we'll be releasing here today. And this is a beautiful lapel pin, a small, beautiful lapel pin, golden lapel pin, and you should wear it probably every day, which we expect you to wear it every day, and the fraternity feeling will be there, the Chavakan fraternity feeling, it must be there. So let me finally welcome my committee members, our committee members here. Jaws Secretary Jaws, Treasurer Deepa Varghese, immediate past Chairman Srinivasan is here, as well as the CASA Chairperson Alan Joseph. All are here. Once again, welcoming each and every one of you and moving forward. And just formally, we are releasing this lapel pin now. Thereafter, our SIRC immediate past SIRC Chairperson will address you. Short words. So, yes, our SIRC chairperson will release the
immediate past SIRC chairman will affix the lapel pin to our chairman, Roy Varghese. And this is the lapel pin which is going to be to all the ARS members.
The new identity, very important. Beautifully done, the golden background with the CA emblem in it. Let us wear this as a symbol of trust, integrity, and, as Chairman said, togetherness of our fraternity.
So it's it is our pleasure to present one lapel pin to our honorable immediate past SIRC chairman.
We can hear from our immediate past chairman of SIRC.
Good afternoon to all of you. The dynamic chairman of the Ernakulam branch, Roy Varghese, our very special learned speaker from Kolkata, Arvinder Singh ji, who is going to enlighten us on the important provisions of Code of Ethics, which is very vast, which is coming into effect from 1st April. It was supposed to come from 1st April. Now the real date has arrived almost 1st July 2020. The new Code of Ethics is falling in place. It's very important that we deliberate on this, and I'm sure some of you are aware that the Council has made it mandatory for all program organizing units, branches, CPE chapters to make this mandatory to have programs on the Code of Ethics as well as standards and auditing. Before we formally started this meeting, we had an interaction with Singh ji, in which his passion, his in-depth knowledge, and his commitment was very, very evident. So all of us are looking forward to hearing from you, sir. Code of Ethics, Chairman has given the background. We have a lot of our members, unfortunately, say, deviating from the definition which the Chairman said. Knowing what is right and doing the right thing is very important. Disciplinary cases, many of the cases last year when I was in Chennai, I used to see these people who are coming there for BC hearings and all that. Very, very casual approach to certain things have landed some members in trouble. There are some relaxations in the Code of Ethics. We have had sessions here. But today, I think we'll have a more detailed, in-depth, deep dives into the real provisions of this. Some relaxations are also there. Let us listen to all that. I wish the program all the success it so richly deserves. And happy that I was thankful that I was invited to release or rather unveil or whatever we call it to inaugurate the giving away of this labels, which are very important, with good identity, very beautifully done. So my compliments to the branch. All the best. How many are there now or linked to the program? Now we have 81 participants. To all of you, my good wishes. Stay tuned to the whole program. And a lot of forthcoming programs, webinars, series of webinars are awaiting us. So let us continue to work as a team and more committed and more regulated under the new Code of Ethics. I wish you all the very best. Thank you so much.
Before now speaker for the Singh, I request
Thank you, Secretary. Good afternoon, fellow members. It's my pleasure to introduce CA AP Singh, a practicing chartered accountant based out of Calcutta. He's been a rank holder during his education, all through his school levels, the university when he did his graduation, as well as ICAI, inter, and final. He specializes in handling regulator and disciplinary issues for other professional accountants and firms across the country. He's been engaged with the specialized vertical for close to 2 decades and was called upon to assist the high-powered committee formed by the Government of India for revising the disciplinary mechanism of the 3 institutes of professionals, including ICAI. He's also been involved with training programs related to the new Code of Ethics organized by the ESB of ICAI. On the social platform, he has served on the International Board of Lions International, which is the largest service club organization, and has traveled across 67 countries as an official speaker at conventions and a leadership trainer. Over to you, sir, for your address.
Thank you. Thank you very much for this opportunity to be able to speak to my fellow professionals from the Ernakulam branch of the Institute. Your current chairperson of the branch, CA Roy Verghese, has been a friend for many years, and we have had tremendous mutual regard for each other. So I guess it is because of your chairperson that I get this opportunity to be able to speaking to my friends from this part of the country. So CA Roy, thank you very much for this opportunity that you have created. And I only hope and I believe that this should be an educative session, at the end of which each one of us, including me, should be able to say that we have gained something, we have added to our knowledge, we have added to our experience, and that will assist us in discharging our professional duties in a more meaningful and in a more safe and secure manner. We need to understand, my dear friends, that at this point of time, the expectations from the professionals the professional accountants have really gone up. The economy, of course, we are facing the challenges of COVID-19. We face the challenge in my part of the country with the cyclone that we suffered. Now, those are challenges that we are facing, and we will perhaps continue to face the COVID-19 challenge for some more time before we have a medicine and before we have the vaccine. But the fact is that the economy is growing, the business is becoming global, the overall financial impact in every respect is becoming much, much larger. And the role of the auditor is thus bound to grow because the professional accountants are dealing with financial statements of entities which are exceptionally large, much, much larger than what they were in the earlier decades, in the last 4 or 5 decades. And so the responsibility levels have also grown. Plus, we must understand that under the new Act, the Companies Act 2013, when we are signing any report as an auditor of any entity, of any corporate entity, we are confirming that the audit has been done in compliance with the standards. Now, this was not a part of our report. Now, this is a very big change. We are now confirming that the audit has been done in compliance with the standards of auditing. So when the standards of auditing, we are confirming that compliance with that, we need to make sure that the compliance has actually taken place. If some of you listen to NDTV for the news and other coverage nowadays, you will find Dr. Pranay Rai, he keeps on repeating one particular message, and he says that the message from WHO at this point of time when we are facing the COVID-19 challenge is test, test, and test. So he sends a very important and a very, very crucial message in a very simple way, that WHO says test, test, test. We really need to increase the test level if we have to fight this menace of COVID-19. Now, in the same manner, I want to start with a particular comment, and perhaps I will end with the same comment also, that the litmus test for safety and security of any professional, as far as professional misconduct matters are concerned, because the government entities, the government authorities, various regulators, the public at large, the stakeholders and the shareholders, everybody, please understand that in the disciplinary mechanism of ICAI, no one is required to really have a stake in an entity to raise a matter of professional misconduct against a professional accountant. Anybody who does not have any stake in that entity can also initiate a matter of professional misconduct. So somebody doesn't have to even own a single share in a particular company, or does not have to have a transaction of even 1 rupee, either as a buyer or as a seller or as a service provider with any entity. Any individual without any stake or business connection with any business entity can initiate a matter of professional misconduct against a chartered accountant in practice based on the work that a chartered accountant has done. So that is the level of exposure to risk that we are running. And you must understand that today we are not facing only one regulator. The Chartered Accountants Act clearly specifies in its preamble that the institute has been set up and this act has been passed because we believe that the institute would be the regulator of the profession. The act has been drawn up and the act is approved by the parliament to regulate the profession of chartered accountants. But today we are not answerable to one regulator only. There are so many regulators. Section 132 of the Companies Act has brought in NAFRA as a regulator, and for large entities and public interest entities, that is going to be a very big regulator as far as the professional misconduct and the quality of work of the professional accountants is concerned. That's going to be a very, very important regulator as well. Thereafter, you have SEBI as a regulator, you have RBI as a regulator, You have SFIO that is also looking at various business entities whose matters are brought before it. And so many of the complaints against the chartered accountants have actually been even filed by SFIO. You have the Office of the Registrar of Companies, which files so many matters. So as a practitioner, we have so many regulators who are looking at what we are doing. So our exposure is simply so big, and it is growing every day. In that scenario, we need to understand that we are now confirming in our report that our audit is in compliance with the auditing standards, with the standards of auditing. We are confirming that. So once having confirmed that, we need to be very sure that that compliance is actually taking place. And there, I would like to, for the next 5 to 6 minutes, talk to you about the requirements of SQC1. I will be dealing most of my time on the Code of Ethics 2019. But our professional ethics has been set up in a manner that there are various standards and there's a code, and before that, SQC1 also is a part of the standards. SQC1 doesn't have the number of any standards, but if you look at the preface to the standards, it clarifies that SQC1 is 100% applicable. So SQC1 in para 3 itself says that every firm should establish a system of quality control. So every firm is required to establish. There is no flexibility there. The word used is should. Every firm should establish a system of quality control. And para 5 says this SQC applies to all firms. So whether it's a small firm or a medium-sized firm, the SQC applies to all firms. And in that SQC, para 9 of the SQC requires that the chief executive officer or the managing partner, or by whatever name called in any business, in any professional firm, is responsible to ensure that such quality standards are there. Such quality control measures are existing and are being implemented. So there is a direct responsibility at the firm level for the quality control measures to be in place, for them to be even documented. And para 14 requires that the firm should establish policies and procedures designed to provide it with reasonable assurance that the firm and its personnel comply with the ethical requirements. The word personnel is defined as the partner and the staff. So the firm is required to ensure that the partner and the staff are complying, that there is reasonable assurance for compliance with the ethical requirements. This is a responsibility of the firm. The firm is required at least once annually to obtain confirmation of compliance with the procedures on independence. So that means if you are an auditor and you are auditing a number of entities, there are independence requirements there. We need to take in writing from every staff member and every partner, from all personnel in the firm, that the independence requirements are fully met. And the independence requirements have been largely expanded in Code of Ethics 2019. We will talk of those requirements when we move on to Code of Ethics 2019. The SQC1 gives you the backdrop. So the SQC1 tells you, first of all, it's applicable to all firms. It's the responsibility of somebody in the firm to have that in place. It's the responsibility of the firm to see that it is being complied with. And it is also the responsibility to ensure that at least once in a year, a written confirmation is taken regarding compliance with the independence matters. Now, before any engagement is accepted, SQC1 requires compliance with the engagement acceptance and engagement continuation verifications. So before an engagement is accepted, we need to go through a process of verification, which is the engagement acceptance verification. The Code of Ethics 2019 there has brought into vogue a KYC in respect of all clients and specifying what are the requirements of KYC. We will talk about that. The SQC1 already specifies that at the time of acceptance of any client or continuation of the client or even acceptance of any additional assignment from a continuing client, the professional accountant must at each point of time examine the question of integrity of that particular client also. So integrity verification is also required. We have recently come across a case where the client did not inform the firm about any development, but the firm found out from social media that there were certain specific inquiries on the client about some transactions in a foreign country, and in that foreign country, relating to those particular transactions, some very serious action was being planned on that particular individual and the others who were working closely with that individuals. Now, very important issue arises here is regarding the integrity of the client from two reasons. Why did that client himself not inform the firm of chartered accountants? Why did he not himself inform the auditors? And secondly, what is really the extent of this inquiry? So after a lot of discussions, we looked at all these requirements under SQC1, and our strong advice to them was that you need to get in touch and have a correspondence with the client. And unless you are satisfied regarding the integrity issues, you cannot continue to be in engagement. So this is a very serious issue. Now, like what Pranay Rai says about test, the three most important words for a professional accountant, according to me, would be document, document, document. Everything that we do needs to be documented. I do understand that everything cannot be documented. But as far as possible, it should be documented to be very clear and to be more precise. As far as the small and middle level practitioners are concerned, our documentation standards really need to rise. Our documentation level really needs to go up. We need to document things at various levels, right from the acceptance of the audit, the continuation of the audit, or the acceptance of a new assignment from the same client, that whether we feel that that is an assignment that we can accept, there should be a documentation regarding that. Thereafter, when we have discussions with the client to understand their business entity, to understand their business environment, to understand their controls, to understand the risks to which they are exposed, the discussions that take place in compliance with SA 315 for understanding of the risks of material misstatement, there has to be a documentation of that. The standard does include an option that every discussion need not be, or every meeting need not be reduced in writing. The minutes of every meeting need not be reduced in writing. But what does that mean? That means that if there are X number of meetings, maybe 10, 20, 30, 40% of the meetings minutes may not be reduced in writing, but at least 50, 60, 70% of the meetings, there must be at least brief minutes of that. There must be a record of that discussion taking place, crucial discussions taking place, matters being brought for the knowledge of those charged with governance. There is a standard of communication between the auditor and those charged with governance. That point must be very clear, that we have proof of that communication taking place, and the responses received from them, and the professional skepticism exercised by the professional accountant. There are two words, two phrases. One is professional skepticism and one is professional judgment. These words are always there, but the connotation of these words has changed. Professional skepticism is about an alertness of the mind. and remaining open at all times to information that could be coming in and that could influence the professional judgment of the professional accountant. So that skepticism is an alertness of the mind, an awareness to the reality, and being able to accept information that is flowing in from various sources and work up that information in one's own mind to be able to arrive at the professional judgments. These professional judgments that we are concerned, we have case laws which tell us that errors of judgment do not constitute professional misconduct. They are landmark case laws, and we can always rely on them. But the point is that those judgments must have been made within the parameters which are permissible to the professional accountant, to the auditors. Did we do all that we were required to do? Did we get the information that we are required to get? Did we perform the procedures which the standards prescribe that we should perform? Do we have documentation in support of the procedures that we prescribed? Do we have audit evidence in the manner it is required to be stored in our audit working papers, audit working files in compliance with SA 230, that we can demonstrate that this is the work that we have done? Is that work visible to anybody who is not otherwise engaged with the accountant, but with that individual also come to similar conclusions? If all of that is there, and there is further proof of our having interacted with the management and those charged with governance, once again in accordance with the standards which are prescribed, then we can say that the professional judgment that we have arrived at is reasonable. There may be errors of professional judgment, then you will have that space there to fight. Even if there is an error of professional judgment, but then those errors can always be there. But look at what I have done. Look at the depth of what has been done. Compare it with what are the requirements. The mapping of the requirements to the actual performance of the procedures and being reflected in the audit evidence in accordance with SA 230, which is there in the working files. Now that documentation, if that is there, and if the proof of those meetings is there, then of course we will be able to demonstrate that professional skepticism and professional judgment have been duly exercised. At the time of acceptance of a particular engagement, the audit firm is also required to ensure that they have the capacity to undertake the services which they are confirming that they would perform. And that capacity must come through its own personnel. Personnel, as I said, has been defined as the staff and the partners. That means if a particular engagement is given to my firm, I need to first, it could be given to any firm of chartered accountants, but that's not enough. The SQC one makes it very clear that we can accept that engagement only and only if we have that capacity within the firm to carry out that engagement. Which means that if some specialized knowledge is required, whether that specialized knowledge is available within the firm, there are standards for using the auditor's experts. It's not that an auditor's expert cannot be used. We can always take advantage of the auditor's experts, and the standard lays down very clearly as to what are the safeguards to be followed and safeguards to be kept in mind before we rely on the work of an expert, and those safeguards are prescribed in that particular standard. The moot point is, but the core competency must sit within the firm. If that core competency is not there, then you cannot even accept that assignment. You accept that assignment, then you are doing something which is not permissible under SQC. So these are the important issues that needs to be kept in mind. There may be issues that may come up between the EQCR and the engagement team or the engagement partner. There is also a requirement that every audit of a listed entity must have an EQCR. Now, I am aware of the fact that a lot of middle-level entities, when they get opportunities to be auditors of listed and public entities, they complete the audit But I mean, please pardon my saying so, I'm aware of the fact that they do not have an EQCR there looking into the quality control matters. EQCR is compulsory. SQC only makes it very clear. And there are separate standards about the working of the EQCR. And the engagement quality control reviewer is not a member of the engagement team. The engagement partner does not even have a role in selection of that engagement quality control reviewer. And that engagement quality control reviewer could be someone within the firm, could be even someone sitting outside the firm. But then that EQCR must come to certain conclusions, whose conclusions have to be documented. And they have to be documented before the date of the signing of the audit report. Now, all that must come out very fairly and squarely from the audit working papers. Now, we are not very sure as to how much of that's being done. This is what I'm trying to just tell you, that the times are changing and everything is coming from the viewpoint of documentation. And that documentation and the requirements must need essentially be taken care of. I just wanted to sound this as the background before I start working and talking to you about Code of Ethics 2019. And I will now bring up the Code of Ethics 2019. Yeah, it is here, and I'm going to start working with it. But before that, for so far, whatever I have addressed, if there are any questions or if there are any queries, I would like to finish them off before I enter the chapter of Code of Ethics 2019 proper. So, CA George or CA Roy, would you help me if there are any questions or any queries? We could take them up now before we go in for the part that I've already discussed.
I think, sir, I don't think there is any question raised by anybody. I think so far. If there is any query, we will raise it at that time. No problem.
My friends, those of you who are tuned to this webinar, this is what I told your chairperson and the secretary of the branch, that you do not have to keep questions right till the end. I would prefer you write down your questions in the chat pane. CA George and CA Roy and their other team members who are sitting together, who are working for this webinar, they are looking at the chat pane, and they have the liberty, I have told them, I've requested them to raise those questions even as I am speaking, because some questions lose relevance if they are kept right till the end. So we can take up the questions in between also when we go through each of those issues. So now, Code of Ethics 2019. What's happened? Have you taken away my rights to present? Hello?
No, never. I think you can share now. We are seeing that your PPT, we are seeing it.
No, but it is not moving ahead. It is stuck up on the first screen only.
1 second, sir. 2-1.
Sharing and restart. Sir, please stop sharing.
So integrity, I don't know, you're making some changes which is impacting here. So integrity, you look there, integrity deals with the following. Where a professional accountant shall not knowingly be associated with reports that contain materially false or misleading statements, information provided negligently, omits or obscures required information. So if some information which you believe is being omitted or obscured, and you believe that it's happening, you cannot be having any relationship with that financial statement. If you look at the example that I spoke to you, that there was some information which was being obscured, which was not being brought to the knowledge of the professional accountant. So our advice to that professional accountant was, that the firm was, that you cannot continue into the relationship with that particular client. You cannot. So that integrity has these very components which are clearly defined here. This is objectivity. A professional chartered accountant shall not undertake a professional activity if a circumstance or relationship unduly influences. So if there is any kind of undue influence on the professional accountant's professional judgment, then he cannot undertake that particular activity. Professional competence and due care. That competence, that current technical and professional standards and relevant legislation must be clearly known. Today, there are various other legislations other than the Companies Act and some of the other transactional legislations. There are various other legislations that would be in place. So the chartered accountant, the professional accountant would be required to have knowledge about those various other legislations. You will find that that area has been tremendously expanded. We will be discussing it in details in this Code of Ethics 2019. It has been very much expanded, and the responsibility that is now cast upon the professional accountants, even if they are in service, not only, even if they are in employment, not only in practice, even when they are in employment, there is a lot of responsibility that is being cast upon on the shoulders of a member of the Institute of Chartered Accountants of India in respect to the knowledge of the contents of various legislations and the compliances with those legislations. And he needs to act diligently there. Now, there are two words. The words are due diligence and gross negligence. These are extremely important words. These words come out of Clause 7 of Part 1 of the second schedule to the Chartered Accountants Act. There are two schedules to the Chartered Accountants Act which specify what would constitute a professional misconduct. The Schedule 1 is of the lighter issues, and the punishment, the highest level of punishment is also lighter in terms of Schedule 1. Schedule 2 is where the punishment level is higher. And in schedule, there are 4 parts, there are various parts, 3 parts, I'm sorry. And part 1 of this schedule 2, clause 7, is kind of a bucket clause, according to me, where a lot of issues come up, which says that a chartered accountant shall be held guilty of professional misconduct if he does not exercise due diligence, and if he is grossly negligent in the discharge of his professional duties. So the word due diligence comes in there, yet the word due diligence is not defined in the Chartered Accountants Act. The word due diligence is not even defined in the Code of Ethics. So the meaning of the word due diligence and the meaning of the word gross negligence has to be understood by the practitioners themselves. And that definitely will mean, due diligence would mean, would definitely include doing things which are essentially laid out by the standards to be done by the professional accountants. So what is expressly stated in the standards, if that is not done, then definitely would qualify as lack of due diligence. And what is stated in the standards is a very vast thing. So there are checklists with respect to all the standards issues. There are implementation guides. There's a lot of work to be done. This could be done even by some of the firms coming together and having a common R&D, or having regular discussions on the applicability of certain standards, or the highlights or the important factors in each of the standards. It's important to be 100% abreast, because that is what will really constitute lack of due diligence. I'm again stuck up, my friend. You need to, I don't know, how will I move on?
I think there aren't many problems, sir. I think here nothing has been done. I think. One second, check.
And professional behavior is compliance with the relevant laws and regulations. And what might discredit the profession? This what might discredit the profession is a very important thing. There are 2 bucket clauses as far as professional misconduct is concerned. One is a bucket clause which I have just narrated to you, is lack of due diligence and gross negligence. That is clause 7 of part 1 of the first schedule. There is another bucket clause which exists as clause 2 of part 4 of the first schedule, which says that a chartered accountant, whether in practice or not, would be guilty of professional misconduct if he does, if in the opinion of the council, he brings disrepute to the profession or the institute. To bring disrepute to the profession or the institute. Now that is what is being spoken here, is discredit the profession. What is disrepute to the profession or the institute is not defined anywhere. That definition doesn't exist. That has got to be deduced. And there are laws, and its expanse has become very wide. There is a particular case which went up to the Supreme Court recently, in which the Supreme Court has now settled that in case there is a chartered accountant who has used this knowledge to deceive an individual in a certain manner, which does not even relate to the discharge of his professional duties, he would still be bringing disrespect to the profession and the institute, and thus would be held guilty of professional misconduct. So if there's a chartered accountant and he is, say he's got his office which he has taken on rent, and it comes out and it is ever proved that his rental agreement, he has, caused some things, made some changes which are not proper, which are not legitimate in the rental agreement, and try to protect that agreement to anybody else. That itself is enough. If it is proven, that is enough for that individual to be for that action under for professional misconduct to be taken against the chartered accountant, although what he did was not a part of the profession. It was not as a part of discharge of his professional duties. So what might discredit the profession is anything that might discredit the profession, and that expanse has been really widened. And then a professional accountant should not make three things: exaggerated claims, disparaging references, and measures to advertise. We are aware of the advertising issues. There are some advertising guidelines. We need to read those guidelines and we need to be aware of them. But then exaggerated claims and disparaging references need to be thoroughly dispensed with by any professional accountant. In applying the conceptual framework, now all of this was the conceptual framework. In applying the conceptual framework, a professional accountant is required to identify the threats, evaluate the threats, and address the threats by eliminating or reducing them to an acceptable level. Now there are threats. There are 5 different threats, which also we will see. Each of those threats must be reduced to an acceptable level before a chartered accountant can deliver his report and say that the documents are reliable, that the financial statements are reliable. That is what is required. And in doing that, the professional accountant shall exercise professional judgment, remain alert for new information, and use reasonable and informed third-party tests. The reasonable and informed third-party test, we will talk about that. Now, these are the 5 threats: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Now, when you ask me that question about the GST, while that accountant is filing the GST return, and if in doing that, he is not exercising any judgment. If he's not exercising any judgment, then the self-review threat will not come. That means while he is the auditor, he will not be reviewing something which he has created or which is a result of his own decision. If a document is a result of his own decision making, then he cannot sit on judgment on that particular document. So there would be a self-review threat there. So self-review threat will not exist if that document is not created based on any judgment. And earlier there was no clarification with respect to the so-called administrative services. But now in section 600 of the Code of Ethics 2019, now since 600 is a much later section, and I'm not sure whether we will really get time to reach that section. I'm briefly touching it up now. Section 600 brings out those various kind of engagements with which a professional accountant may be, used, where that person would not fail the independence test. But then for each of the things, that person has to use one's own mind. For example, as far as representation before tax authorities is concerned, he would fail the advocacy threat if he is arguing the matters before the court. So far as the matters are not going to the court, if that person is arguing, that might be acceptable. Which means that if you are arguing before an income tax assessing officer, that is acceptable. But arguing before the court, not acceptable. Using your own judgment, not acceptable. That is not acceptable at all. Self-interest, that is where if you have your own interest in a particular thing and that is what you are looking at the particular document, you cannot be looking at it, because your independence and your objectivity will be carved there. Familiarity and intimidation. We will come to each of these threats, but then each of these threats is so there are 5 principles and there are 5 threats. So for each of them, for each of the decisions while the chartered accountant is making, we need to make sure that these threats have been addressed, and if they have been reduced to an acceptable level, well, then one can move ahead. If they are not reduced to an acceptable level, you will have to really make a call, and that call can go as far as disassociating yourself from that particular engagement. It may be required. Or sometimes the call is to have a quality reviewer working with the same team, with the engagement team. Or sometimes it is a quality reviewer from outside working with the same team. And in some cases, to reduce the threat to an acceptable level, the action is that where one particular individual is having a particular matter regarding independence with a particular client, not using that individual as a part of the engagement team. Now, these are matters which are left to the judgment of the chartered accountant. But there are some cases where some relationships are defined under the Act. And if those relationships are being attracted, then there is nothing left to the knowledge, to the judgment of the chartered accountant. There's nothing left there. In those circumstances, he cannot continue with the professional engagement, or rather cannot even accept the professional engagement. It is where professional engagement can be accepted under the law, then the code of ethics starts becoming applicable, whether those threats are properly dealt with or not, whether those threats are being reduced to an acceptable level for a chartered accountant, for a professional accountant to continue to serve. Now, professional accountant in service shall determine with whom to communicate among those charged with governance. TCWG is a very common word. It is used, those charged with governance. And ensure all among those charged with governance are covered. This is for somebody who is in employment. So for the members of the institute who are in employment, our 2009 Code of Ethics included some very minor observations, not much at all. Rather, the main thing that was usually covered is that there is a clause, which is clause 1 of part 2 of the second schedule, which states that a chartered accountant is guilty of professional misconduct if he does not comply with the requirements of the council guidelines. And those council guidelines are the guidelines which have been enunciated in 1988. And in that council guidelines, there is a 1-sentence chapter. There are some chapters, but there is a chapter which is basically just 1 or 2 sentences, which says that a chartered accountant who is in employment must continue to must exercise due diligence. So that was all that was there. But here in the Code of Ethics 2019, the expanse is very large. The professional accountant in employment must communicate matters to those charged with governance. In communicating with those charged with governance, he must not be choosy. Everybody who is covered by the clause of those charged with governance must receive those communication. And in case the business transactions he must ensure that business transactions are reflected accurately, that there is no intentional omission, there is no, that the financial statements are not made with a view to mislead or to influence anybody. And if any of these things are happening, and it is in the knowledge of the professional accountant who is otherwise in the employment, he is required to escalate it to the next level. And while he is escalating it to the next level, he or she must keep a documentary proof of that. That is going to be very, very important. And he shall obtain knowledge of the relevant laws and regulations. Be aware of the provisions for informing any regulator or prohibition on alerting the relevant party. So, the accountant at a certain level may inform a senior accountant. Those who are senior accountants and are very close to the decision-making authority will inform to the next higher level. But if the matter is so important and it involves public interest, it involves public health, it involves public money, sometimes the accountant, the senior accountant in employment will even be required to take a decision whether to alert a regulator. And in doing so, if that person has to alert the regulator, that person would be exempted from the requirements of confidentiality, because he is ultimately going to pass on information which he has got only as a result of his employment. So the code clearly specifies that at such a point of time, the confidentiality requirements would not apply. So, and these are specially for listed entities, and it applies to non-compliance and suspected non-compliances. Now look at the words there, especially with respect to in listed entities, it applies to non-compliances and suspected non-compliances. So even when the professional accountant in service believes that there is a suspected non-compliance, even then he would be required to escalate and bring that matter up for the information of everybody. And then here is a very important clause that we need to protect the image of the profession. We need to protect the image of the institute. And so the professional accountant shall not offer or encourage others to offer any inducement to improperly influence the recipient or some other person. So this is very important. There is one issue which says the auditor shall not accept any inducement beyond the fee. If I am doing a work, a professional assignment, professional engagement, I will not go beyond accepting my fee, and I will not go to accept any amount or anything in cash or in kind which can be deemed to be an inducement where my independence and objectivity would get covered, and so there would be threats which will become so significant that cannot be disregarded, and so my work will not be proper. Now let me explain with an example to you. And this is a practical example. I will not give you the name of the clients. I cannot do that for confidentiality purposes. That a particular client had his board meetings. And for the board meetings, the auditors are also appointed. This particular client decided to have his board meeting in Goa. And then they decided that all the members of the board and the senior staff members are also entitled or also allowed or permitted to bring their spouses along. So they said, we'll have a 3 days or a 4 days, 3 days board meeting, and you are entitled to bring your spouses along. So that was kind of, a little extra courtesy that the corporate entity was showing. That was in good days. They were making money to their staff and everybody. So the auditor was supposed to go there. So the auditor was also told that everybody is going there with spouses. You can come there with spouses. So if the auditor goes there with the spouse, what happens? Is it accepting of a particular gift beyond the fee that it can amount to an inducement? Is the auditor right in accepting that offer that you can bring your spouse at no costs to you? And since the entire board would be there, and all the senior officers are also being authorized to travel to Goa for this board meeting with their spouses. Our interpretation, even before the 2019 Act was introduced, was that an auditor could not do that. If the auditor did it, that would definitely be accepting of a gift which could be deemed to be material and which could be, in the nature of an inducement. His objectivity and independence might be said to be curbed, and this is not an acceptable behavior of the chartered accountant in practice. You might be surprised that these kind of questions come up. Well, let me tell you, yes, they do. these kind of questions also come up. There are much serious questions regarding the applicability of standards and all. But here, so when we were asked that we do not want to be discourteous and we would like the auditor to travel with the spouse, what is the way out? So we said, okay, you can tell them that I will come with my spouse so that we can have good social evenings, and I would respect your opportunity, the opportunity that you are providing for the families to meet. That's fine. But then I would pay for the spouse's travel ticket. You pay for your spouse's travel ticket. Let the spouse travel with you. Everybody gets a room there to oneself. So if the spouse shares a room, that's very fine. But pay for the spouse's ticket to travel. Keep record of it that you have paid for it from your credit card, from your firm. Keep that document with you, and then that's fine. So it's not a question. So these issues can become very important, and these issues are going to become very important. I am telling you, this is just the beginning. It's going to be a much more transparent world. And on the reverse side, the first part of it was not there earlier, which is coming up now, is that even offering something to somebody else or causing something to be offered to somebody else in the nature of an inducement is a conduct unbecoming of a chartered accountant in practice. So the chartered accountant shall not accept or put pressure to breach fundamental principles, not accept and not even put pressure on somebody else to accept to breach the fundamental principles. This is very important, and this could have far-reaching effects. Now, professional accountants in practice. While we have dealt with the issue of raising and escalating the matters relating to the applicability of certain laws, more so in listed companies, that in case there are non-compliances or even suspected non-compliances, that the matter needs to be escalated to the level of those charged with governance and the next higher level, and may even go to the regulator. And in doing so, that would not be a non-compliance with the requirements of confidentiality. All those issues apply here as well. Before we proceed further, there are two differences that need to be understood. When you read the Code of Ethics 2019, you will find these two terms: immediate family and close family. Now, they are not used synonymously and they are not used interchangeably. In many cases, it may really not make much of a difference, but in some cases, there are very fine differences which must be very clearly understood. Immediate family is a spouse or equivalent, and this is official. A spouse or equivalent or dependent. So a spouse or the equivalent of a spouse, which may be even if somebody is living together with an individual, a long-term relationship, not married, would be deemed to be an equivalent. You know what happens is, this is where investments in entities which are either controlled by an auditee or which in turn have a significant influence on the auditee entity, those issues get impacted from here. And certain line, in case you are beginning to think of some big entities that actually this happened, you are right. Earlier, if I limit it to a spouse, then it stays limited to a spouse. The code says spouse or equivalent. So even if they are not married officially, but it's a long-term relationship, it's living together. Even without living together, it's an identified, known, acceptable, and proclaimed long-term relationship that would qualify as an immediate family or dependent. And their investments in entities could impact the independence and could make the firms to be not capable, or not qualifying to accept certain engagements. Immediate family. Now, what is a close family? A close family is a parent, child, sibling who is not an immediate family member. So these individuals could also be an immediate family member. For example, they could be dependents. If they are a dependent, they are an immediate family member. But if they are not a dependent but fall within this category of relationship, then they are a close family. So if they are not a dependent, then a parent, a child or a sibling who is, then they would qualify as a close family. So these are the essential differences between an immediate family and a close family. What I have listed down there below, if you want, you can jot it down. Sections 510.10, A1 and A5, sections 521.4 and 521.6. They differentiate between an immediate family and a close family. I'm not going into them right now, but I wanted to caution you, for you to understand that there is, when you read the words, please understand the import, where they want to hit. In an immediate family, a spouse or equivalent is also covered. That's what they're wanting to do. This is very important now. This is kind of regular operations. KYC system has been introduced. What is included in the KYC has also been specified. I am not reproducing it here. You need to look at it. And subject to the compliances of provisions of Clause 8. Clause 8, Part 1 of the first schedule requires that an incoming auditor must communicate with the outgoing auditor. The incoming auditor is required to know whether there are any reasons for not accepting the engagement. Now, that is very important. So the incoming auditor, the Code of Ethics 2019 says, shall request the existing or predecessor accountant to provide known information regarding any facts or information of which, in the existence of the predecessor accountant's opinion, the proposed accountant needs to be aware before deciding whether to accept the engagement. So all that we are asking is, please understand, when this communication is done, we are not asking for a no objection certificate. Very often the word used is, have you got a no objection certificate? There is no requirement for a no objection certificate. There is a requirement for communication. Now that communication requirement is being expanded, that you should specifically ask for this detail, that do you have any, it's not that earlier what we used to do is that you could write that I have been appointed as the statutory auditor of so-and-so. Is there anything that you want to tell me? If I don't receive a response from you, well, that's fine. Within 7 days, I will just proceed. That kind of letters used to go. But now the communication has to be very specific, asking whether you have got any facts or information which you believe you must pass on to me, which can be material and instrumental for me to decide whether or not to accept this engagement. This must be specifically asked for. And if that person does not provide that communication, then the incoming auditor is required to take other reasonable steps to obtain information about any possible threats. There could be some threats because of which you should not be accepting a particular engagement. So if there is no information coming to you, we would earlier say that if you don't let us know within 7 days, we'll presume there is nothing and we can move forward. It's out. Now, if there is nothing coming back within that 5 days, 7 days, or 10 days, whatever period you want to specify there, you will have to take certain additional steps to find out if there are any threats. Now, what could be those steps? You could go and Google. You could go to some social database. You could go to some financial database. You could look for some details on the MCA website. That you have looked for it and you have found nothing about it, keep a proof of that. On that particular day, you searched the MCA website and this is what you found. On that particular day, you did a Google search or you did a search of some other financial databases and you found this. Based on that, there was nothing that you could have concluded about not accepting the engagement. Keep proof of that. That's what I said. Document, document, document. You keep a document of it, it is fine. Now, the next issue is here. In the Code of Ethics 2009, the incoming auditor had to correspond. The outgoing auditor or the auditor who was moving out may respond, may not respond. But the new code makes it compulsory. They say that the outgoing auditor must communicate unambiguously and honestly. That means if you are the outgoing auditor, you get a note from the incoming auditor and you do not communicate, now that will also be that will also constitute a breach of professional code of ethics. Because you are required, you are obligated to communicate unambiguously and honestly. Communicate unambiguously and honestly are words directly from the code of ethics. You are required to do that. And for a recurring client engagement, a professional accountant shall periodically review whether to continue with the engagement. So for a recurring client engagement, it's not that I did that verification once and I don't need to do that verification again. No, that's not applicable. That doesn't work. You need to do that verification again. You need to do that verification on an ongoing basis. And if while you are doing that verification, you come across some information, which information, if you had it initially, you would have not accepted the engagement, then you need to take a decision. You may be at a point where you cannot withdraw. The law at certain points does not allow you to withdraw. For example, if you signed the report of 3 quarters, you are not allowed to withdraw just for the 4th quarter. You're not allowed to withdraw, especially in the listed entities. SEBI doesn't allow it. SEBI has put up a strong embargo there. So SEBI doesn't allow it. So the point is, if you are not allowed to withdraw, that is something separate. But if you are allowed to withdraw, you need to consider whether all your threats have been brought to an acceptable level or whether you need to withdraw from that particular engagement. That is an important issue. The next is the level of fees quoted. Now, we do not have essentially a prescribed level of fee that if you do not quote this particular level of fee, that you are required to quote a particular level of fee. It's open to everybody. But if a very low fee is being quoted, you are answerable whether there is a self-interest threat. That means your motivation, or how are you going to cover up the costs of the engagement? If you are not going to cover up the costs of the engagement, how would you be discharging your professional duties as you are required to do? So although there is no threshold which has been prescribed with respect to the level of fees, Section 330 of the Code of Ethics 2019, it says that a self-interest threat to compliance with the principles of professional competence and due care may be created if the fees quoted is so low. And you can be challenged for that. So you should be able to demonstrate how quoting such a low fee. At the same time, there are some professional accountants who may decide that we will not charge a fee from some charitable organizations, from some senior citizen homes. I am aware of some chartered accountants, they take up the audit of some schools and they do not charge a fee for the audit of the schools. Well, that's fine. That's up to you. That's a policy. So long as you can say that this is a policy which is not applicable to one client. I've got 3 clients of this nature and I'm not charging that fee. I do it but I'm responsible for all the professional standards. I'm responsible for the quality of work which is done, and that does not impact in any way or does not create any self-interest threat, and it does not challenge the principles of professional competence and due care, because that is the policy that I'm following. Well, that's fine. But otherwise, if the fee is too low in terms of a commercial client, in terms of a client which is otherwise regularly in business, you may be challenged with this particular feature. A chartered accountant accepting the money from a client to be kept intact, to be kept in security. It's not that blindly somebody came and gave me the money. Somebody comes to you, tells you this is 50 lakhs of rupees, please keep it on my account. So this money is found on you. Why are you keeping this money? My client brought it to me and so I'm keeping this money. The client wanted it to be kept with me as security. No. Section 350 makes it very clear. Inquire into the source and consider other legal requirements. Because the money is found on you. You may be answerable to that, for that under the income tax law. Income tax law says something else. So you cannot take those plea that it was just kept with me, that was the client's money. You need to know the other legal requirements. You need to inquire the source. And in any case, if you're keeping the money, you need to keep the assets separate, provide account of any income from such assets, and use only for the intended purpose. All those three must be complied with. Matters discussed in service category for non-compliance also apply, or suspected non-compliance also apply for risk. I've already mentioned this to you. Okay, we come here now. In case of a listed component of a parent, any non-compliance shall be brought to the notice of the group engagement partner. Now, the group engagement partner may not be from your firm. You may be auditing only a component. And there may be such an important matter that relates to a particular component. The parent auditor usually corresponds or is required under the standards to correspond with the auditors of the components and to provide them a list about certain specific matters which they feel would be important from the group reporting point of view. And the component auditors are required to comply with them and to correspond and to reply back and to respond to the parent auditors. Here, if there is any specific non-compliance which the component auditor believes is vital, is material, that individual, that auditor, component auditor must bring to the notice of the group engagement partner. Once again, document all decisions, all important meetings, all reviews at the time of understanding the risks of material misstatement, understanding the business environment, understanding the controls, all of them to be documented as far as possible. Important meetings, the team meeting, the team planning meeting, where you are discussing the duties within the team, explaining the background of the particular client, all of that needs to be documented. That particular meeting took place. Who was attending that meeting? What did you explain? Were all the important members of the engagement team present there? Do all the engagement team members understand their responsibility? I'm repeating again and again, document, document, document. Coming back to where I was, where the professional accountant has thus withdrawn. So if the professional accountant at that point of time from a component, who's the auditor of that component, has withdrawn, he must also pass on the relevant facts and information concerning the identified or suspected non-compliance to the proposed accountant. So it's not that, okay, I'm withdrawing, I'm not going to be auditing your accounts, you go get it done by somebody else. And I will not tell that person why I'm withdrawing. You cannot do that. If you do that, and it is proven that you had a good reason to withdraw, and that you did not bring those reasons to the knowledge of the incoming chartered accountant, to the incoming auditor, there's a breach of professional misconduct there. Now, these are very serious. These are going to be very serious issues. And I can tell you that if you believe that you could take it for granted, it's not going to happen. There is a separate, now if we are dealing on this particular issue, there's a separate guidance note on the resignation of auditors. Go and read the guidance note on the resignation of auditors. You will find, that guidance note, which was issued, I think, in 2018. I think it's a 2018 guidance note. A lot of things that they were talking there will begin to have much more relevance when we read the Code of Ethics 2019. And the professional accountant may be also required at certain points of time to disclose certain facts to the regulators. They should be acting in good faith, and they should be then determining whether it is important, for what is the extent to which they should be informing the regulator. And then they should also decide whether it is important for them to go and tell the client as well that they have brought some matter to the notice of the regulator. And in doing all of this, complete documentation is required. Documentation will be the key. Independence during engagement period and during the period of financial statements. I have referred here to section 144. When you read section 144, there is one sub-clause there. That one sub-clause could keep us engaged talking for hours and hours. That is the sub-clause of management services. As an auditor, you are not permitted to provide any management services to a client. Now, what is the management services? Such an important terminology used in section 144, and yet the word management services has not been defined in the Companies Act 2013. The word management services has not even been defined in the Code of Ethics 2019. The word management services is not even defined in the IESBA Code of 2018. So what do? You look at the history of the legislation. There are three various committees and the company law committees and the various other committees which were formed, which went and debated about what could constitute and what would not constitute as management services. Whether this should be a positive, whether this should be a positive way of looking at it, or whether it should be a negative list. That's what cannot be done. A lot of discussion has taken place. And at the end of it, they followed the global methodology. The global methodology is accepted by not stating anything in the act, leaving it open, just using the word management services. And in the code of ethics, instead of defining management services, what is defined is management responsibilities. What is understood is, from the global perspective, and that is what would apply, I believe what would apply to practice in India also, is that management services are those which actually are rendered to do what the management would do. So it is basically discharging the responsibilities of the management. So if a particular service is in the nature of a management responsibility, that is what is required. That is what is required to be understood. So management responsibility, if anything qualifies to be a management responsibility, you do not undertake that as part of the management services. That's the key. What I have told you could otherwise be discussed in a 2-hour to 3-hour session only on this. But IASBA code also does not define, at this point of time, let it suffice to say, it does not define management services. It defines management responsibilities. Our Code of Ethics 2019 has also included the definition of management responsibility. And that is those particular actions which are decision-making, which actually belong to the realm of the management, because an auditor does not sit upon any decisions. There are various case laws that the auditor is not making any specific decisions. The auditor is not making decisions on behalf of the management. An auditor's job is totally something else. But if in doing that, the auditor is assisting in certain administrative services, that becomes possible. That remains permissible. But if this management services are those services which are disqualified, because if they qualify to be management responsibilities, then they cannot be performed. As opposed to them, there are certain other services which are management consultancy services, which the Chartered Accountants Act permits a chartered accountant to perform. You have to read section 2, subsection 2, subsection 4, 224. If you read section 2, subsection 2, subsection 4 of the Chartered Accountants Act, you will find the talk of the management consultancy services which may be permitted. And also the institute has issued what is called the guidelines for corporate practice. And there may be members of the institute are permitted to set up corporate practice at times for performing the consultancies, for providing the consultancy services. And that is permitted. But then that is not permitted in case of the audit client. In case of the audit client, that would create a confusion, that would create a conflict. And those conflicts have to be very, very clearly understood. Those conflicts have to be very, very clearly demarcated. And section 144 has to be clearly understood. Section 143.3 has to be clearly understood. 143.3 and other sections of any entities having directly or indirectly any kind of a business relationship and so on and so forth, those have to be clearly, very, very clearly understood and moved forward. So please read those sections, read them in details. I have cautioned you enough. So this is the prohibitive side of it. You cannot, an entity that has any of the following relations with the client, that's not permissible. This is the negative part of it. An entity that has a direct or indirect control over the client. If there is a step, supposing you are the auditor of an entity X, there is another entity Y. That entity Y has a direct or indirect control on the client. You cannot be having a business relation with that Y. You means the auditor or the auditor's firm or the partners or the relatives or the networking firms of this particular audit firm cannot be having business relationship with that other entity. Similarly, an entity over which the client has direct or indirect control. So you are the auditor of an entity X. There is another entity Y over which the client has a direct or indirect control, and you are making investment into that particular entity also. You are funding money there. You are having relationship there. You, your partners, your relatives, or your networking firms, directly or indirectly, are having any kind of relationship there. That will not work. An entity in which the client or an entity related to the client under C above has a direct financial interest. So it takes it one step further. An entity which is under common control with the client, a sister entity, there also you cannot, these are entities with which your business relationships are not going to be permitted. So this is a full-fledged discussion. We could discuss more about it. There is more about independence which is coming, which you will see. And so you will need to read this in very, very details when you read that. I'm sure that you're reading the Code of Ethics 2019, but you will have to read it in more details. Independence. When we talk of independence, it's about the independence of mind, independence in appearance. There's an independence of making professional judgment, integrity, and exercising objectivity and professional skepticism. I've spoken to you about all those terms. Independence in appearance, a reasonable and informed third-party test. We'll talk of the third-party test and members' integrity, objectivity, so on and so forth. The third-party test is that when a particular decision that a professional accountant has taken, if somebody else who is a third party may not be an accountant, but posed with the similar circumstances under similar scenario, what is the likelihood of that individual taking a similar decision? If that decision, as far as the independence tests and the threats are concerned, is they believe that the threats have been reduced and there is no threat to independence, there is no particular threat which is at a level at which it is not negotiable, and that their fundamental principles have not been abused or not been challenged, and that's a third party opinion, well, then that's what, if an auditor does, that's very fine. So it's a presumptive thing. What would a third party think? What would a third party's perspective be? If a third party's perspective would be the same, well, then it's fine. So here we come to mergers and acquisitions. PA stands for the professional accountant. PA should evaluate independence with reference to the entity being merged or acquired. Today, you are an auditor of an entity X. X is going to acquire an entity Y. So what is going to happen? What has been your past relationship with the entity Y? Because that Y is going to become part of X. Now, you may have accepted the engagement, the professional engagement with X, not knowing that X is going to take over Y. So you haven't done any crime. But now that you have knowledge that X is going to be taking over Y, and you had a previous relationship with Y, now is it right for you to continue with that engagement? First and foremost, bring it out to those charged with governance. Then you could various safeguards could be employed. You may not use certain personnel. You may find it proper to use a quality reviewer, or you may just continue for one particular year, complete that audit, and just get out of it. Or you may believe, no, in any case, the risk is, or the independence compromise is going to be so big that I need to resign immediately, and you do that. So whatever you do, the entire thing has to be documented. Now, this you did not know this earlier, but these are circumstances because this is the world of mergers and acquisitions, and we have to keep that in mind. And in case of any breach in the independence requirements by the firm, immediately address the relationship or interest. So, supposing you are engaged with a particular entity, and there is a particular breach of independence which is being brought to you, and that is being communicated to you. At the firm level, it would require to be addressed, and it would be required to be addressed immediately. And you need to also ascertain whether you can issue the audit report at all, because if it is not addressed, you cannot issue the audit report. Now, here I'm coming to something which is very, very important. As far as fees concerned, please remember that the Code of Ethics 2019 also clarifies at one of the points that supposing a fee is pending for 2 years or a fee is pending for 3 years, you could have self-interest threats there. They say in that case, your pending fee has become kind of a loan which you have given to that entity, and you are still continuing to be an auditor. There could be a risk. There could be a risk associated with that. And you cannot continue to be an auditor. So if for more than a couple of years, the audit fee is remaining pending, that needs to be reviewed very seriously, whether you can continue to be an auditor, because you may be continuing to be an auditor looking at the old relationship which you have with that group or with that particular company that, okay, I've been there for 25, 30 years. Now 2 years or 3 years, they haven't paid me. It doesn't matter, but I still continue to serve. There's something called a relationship. That's very fine. But there's something called a relationship. That relationship is getting too close. It's getting too familiar. The familiarity threat may be hitting you. The self-review threat may be hitting you, because for 2 years and 3 years not getting the fees, the court says that's like your loan to that particular entity, and you are not supposed to be auditing a particular entity to whom you have given a loan. So that's not done. Now, the next point which is coming here is very, very crucial. And this is a very important point. But before I go back here, before I go and start talking on this point, I would go back to the chairman and the secretary, CA Roy and CA George, if there are any issues or any queries from anybody who's put them up in the chat box that you'd like me to address at this point of time.
I think no specific queries have been raised so far, I think.
Very good.
Yes, so if anyone wants to raise a query, please raise it now. I think you can raise the point now, query, and we will discuss it. If anyone?
Now, there are a lot of other important issues. I think, your time is also going to run out. My time is going to run out. I will cover in about 7 to 8 minutes, one or two other important issues, and then we will have to wind up. Let me start with this one. This is very important.
Right.
This is very important. I think this is very important for the small and medium practitioners, where more than 15% of your total fees, which is received by the firm, is received from the same client or the related entities of one particular client. Then there is a threat, and safety measures need to be applied. Let's look at an example. A firm which has been which has been in the profession for last 15, 20, 25 years, a firm, 3 or 4 partners, a few paid employees, a few articles who work together, 15, 25, 30 people working in an office, a firm of professional accountants, and they're doing good business. Maybe the total turnover is about 1 crore of rupees, maybe a little more than 1 crore of rupees. And then you've been working with a couple of groups, 2 or 3 groups, which they have a number of entities in that group. And you provide a whole lot of services to that group, and that keeps you busy, that keeps the whole office busy, and keeps the whole, the working of the office going, and everybody is very happy about it. And from, say, one particular group, you're making 25 lakhs of rupees. From another group, you're making 20 lakhs, and a third group, you're making 30 lakhs. And then there is more money which you are making out of your fee of services being rendered to a host of other clients. But what's going to happen here? Here it says that more than 15% of the fees during the last 2 years, the gross fee that you've earned, it's more than 15%, and it's coming from the same client or the related, or the clients which are related, or the entities which are related to the same client. Then there is a threat which is being created, and you need to address that threat. It doesn't say that you can't do it. You go back to those charged with governance. You go back and talk to them. And you talk to them, you go back, you talk to them, you find out what's got to be done. If required, you may be required to bring in a quality reviewer. The quality reviewer may be within the firm, the quality reviewer may be outside the firm. And then you need to continue to do these tests regularly. Of course, in this calculation, if the total fees is less than rupees 5 lakhs, you don't have to bother about it. And in case of government clients, you don't have to bother about it. So the government clients is also exempted. Section 415 of the Code of Ethics 2019. But if it's not about the government clients, it's only purely about the private clients, this code is going to require you to examine the threats, is going to require you to examine the fundamental principles, and then require you to take actions suitable to bring the threats to an acceptable level. Now, the problem that will come is, I am repeating again, it doesn't say that you can't accept the engagement, but it says that you need to take certain steps to bring down the threats to an acceptable level. And that threats to an acceptable level is being brought down by using of a quality reviewer. Sometimes a quality reviewer sitting outside the firm. Now, the moment you bring in a quality reviewer and a quality reviewer sitting outside the firm, you're going to pay that person. If you pay that person, that's an additional charge on you. That's going to hit the small and medium-time practitioners. Please read section 415 of the section 415 of Code of Ethics 2019 very properly. Please also read the relevant sections of NOCLAR, which is the other laws and regulations which are applicable to chartered accountants in employment and chartered accountants in practice very, very carefully. Please read to the independence part. I have dealt with some of them and I don't know how much time I'll have to deal with other examples. Those very importantly, and please do read with section 600, which is the admin and other services. We'll see if we can do a little bit there. And I've already touched it. But that's been just very briefly touching it. But those are very practical issues, and you need to be fully aware of all of them. So I'm also telling you the other factors which you need to be looking at. This I've already spoken to you. A firm shall not evaluate or compensate a key audit partner based on that partner's success in selling non-assurance services to the partner's audit client. So, doesn't happen in small firms, begins to happen in medium-sized firms, and little more than medium-sized firms, this happens very often, that the annual reviews of the performance of the partners takes place. And in that, one of the things is, you're a partner of that audit client. What more services could you sell them? The Code of Ethics 2019 says that in any firm's review system, this cannot exist. Now you say, how will anybody get to know? They will get to know because they will ask you for a copy of the SQC. You say, I don't have an SQC, so you get a first charge there. Please understand. The regulators now are approaching things from a very different angle. And I'm shifting a little bit to what your past chairman who was there in the beginning told me that first thing it says is give me a copy of your SQC1. Now, so far, most of the firms that they're looking there are not at these small firms. There are some medium-sized firms there whose audited clients also NAFRA is looking at, but those matters have not been probed in details till this point of time as per the information that I have. So, if they ask them for the copy of the SQC1, that's going to be an issue. They ask them for the copies of the audit files. Now, when audit files are there, please do understand that under these standards, an audit file is not necessarily a hard copy file. Anything in soft copy or in any electronic or any other format is also a working file. That is one of the paragraphs, I don't remember, maybe paragraph 6 of SA 230 or something. It says, and that's also a working copy file. So they say that give us copies of your working copy file. They take copies of your working copy file, and then they say everything that you want to say in defense of a charge or an allegation of professional misconduct, of not having seen this, not having seen that, not having done according to this particular standard, not having done according to this particular standard. And they look at the standards with a magnifying glass, a super magnifying glass. They look at the standards, each and every phrase. You've not done this, or you give me proof of this, having done this. And then they say, all the proof that you give and all the explanation that you give must be linked to what you've given me as the working file copy that you've given me. So you must link it to that. You can't go back to them and say that what I gave you, there's some more documents which I want to give you. They said, no, I asked you for a copy of the working file. You should give me all the working file all at once. Working file cannot be touched. Working file cannot be tampered. Working file cannot be expanded. Working file must be closed within 60 days of the close of the engagement of the signing of the audit report. SQC1 feature once again. Within 60 days of the close of the audit, you must complete the working file, and thereafter the working file cannot be touched, cannot be expanded. And thereafter, if any alteration is done to the working file, that must be logged and that must be recorded. I mean, where are those systems? We are not necessarily existing in small and middle. But my issue is that now, when a lot of middle level firms are actually the auditors of a lot of public interest entities and public sector entities, a lot of which comes through CAG and others. And I'm putting those little higher than the middle level firms there, which are there. This is the methodology which the regulators are beginning to adopt. And that methodology, we need to be prepared to deal with it. And that is where I'm talking of documentation, documentation, and documentation. Of all my experience that I'm sharing with you is, you will get to know the technical knowledge. The technical knowledge will come to you through webinars, through various other seminars that you will be attending, and various other literature that will be issued by your branch or by the Southern India Regional Council or by the Institute of Chartered Accountants of India. All of that will happen. But one thing that must become a part and parcel of our culture of working is documentation, documentation, and documentation. I'm saying this out of my experience of 20 years in handling matters relating to professional misconduct. So now here it is. These are some of the issues. Yes, 510.4, 510.6. This is what I was talking to you. There shall be no direct financial interest or a material indirect financial interest in the audit client, by the firm, network, firm, partner, immediate family, engagement team, partner, or managerial persons. When an entity has a controlling interest in an audit client and the client is material to that entity, none of these individuals or entities can have interest in that particular entity. And when the firm, network, engagement team member, family member shall not hold a financial interest in any entity, when an audit client also has a financial interest in that entity. So you see, any kind of direct or indirect linking, not only with the audit entity, but with a third party also, where an auditee has a link with that entity, either auditee having invested there or that entity having been invested in the auditee entity, or they're exercising significant influence on each other. And then you as a firm or the network firms or the partners or the immediate family, if you saw that the word there was the immediate family, that was the 510.4. The word there is the immediate family. If that is what happens there, then you cannot be making those investments. Independence is impaired if that's what happens. Please also understand at this point of time, I would like to start telling you time and again that we are in a world where we are getting on to the language of accountants, and the language of accountants comes to the standard. So far, whatever I'm talking to you is about the auditing standards. There's something called the accounting standards that we know of. And the world is really changing with the introduction of Ind AS. A lot of entities with which you are working today, with which most of the small and medium-sized firms are working today, the Ind AS may not have been implemented. But it is all a matter of time, maybe next 2 years, 3 years, 4 years, 5 years at the most, before which the Ind AS becomes implemented. And Ind AS is just an import of the IFRS. So when that becomes implemented, we need to update ourselves with the knowledge of those particular standards. And some of the issues in those standards can at sometimes be even, can amaze us. They can make us dumbstruck. The definition of an equity in those standards is so different from what is normally understood by an equity. That is not what I'm dealing today. But what I'm trying to say is, just like Code of Ethics 2019 is changing the overall landscape of the approach to a professional's work, similarly, the standards from the accounting side, so far as the acceptability and implementation of the IFRS through the Ind AS is concerned, is changing the landscape there. And maybe that's not become applicable to many of the entities with which we are working, but then it's all a matter of time before we will continue to be covered by them. Here it is that there are cases when members of the engagement team they get out of the chartered accountant's firm, and they start holding office with a particular client. What happens? Is the independence impaired? Is the independence not impaired? Could you Could you continue to render services to that particular client where the person who is now sitting on the opposite side was a part of your engagement team earlier? Now, there are important issues, and there are important issues where also certain takeovers taking place, and in listed entities also. So these are the sections of Code of Ethics 2019 which take place which take care of each of those particular instances. They say that if there's somebody there sitting in a listed entity there who has shifted from an audit firm to that particular entity, up to a certain point of time, there will be no independence. Independence will be taken to be impaired if that person is participating in the drawing up of the financial statements. There has to be a 12-month period gap. And then they're talking of various cooling periods and so on and so forth. I don't think I can continue with it any further because we are getting very close. We are already at 5 p.m. I'm sorry, I think I've overstretched. But then this is a very vast topic, my friends. It was a pleasure speaking to you. And I will still take a few questions if you have. But I would recommend, please read through Code of Ethics 2019 in details. It will not take you very long to do the first reading, maybe 6, 7 hours, 8 hours at most. It's a big document though. Maybe a second and third reading will become more thorough. Discuss it in your own firm. If you have 3 to 4 to 5 chartered accountants in a firm, divide it within yourselves in certain chapters and let each person come up and discuss that particular chapter with all of you. I'm telling you, this is redefining the way we work. This is purely redefining the way we work. And once again, documentation is going to be the key. So I'm turning it back to you, my friends. If there are any questions, we can take them. If there are any issues, we can talk about it.
Sir, there is a question, sir. Does the independence restrictions of immediate family members apply to non-audit assignments like the management consultancy assignments also?
No, they will not. These are assignments, these are engagements, these are independence requirements in respect of attestation jobs.
Sir, you said even in trust, if we cannot be a part of trust with certain exemptions, you said. Can you please elaborate on what are the exemptions like?
Yeah, it's there in the Code of Ethics 2019. One of the sections says that in the trust you cannot be a trustee. Your firm's other partners or family members cannot be a trustee. Anybody from the networking firms cannot be a trustee. It has given the exact specifications there. There's a particular section in Code of Ethics 2019. I had covered it there, but didn't have the time to look at it. It's very vast, actually. I tried to give you an overall, but it is there. If you look at it, you will get it. It's defined there, sir.
Okay. Thank you.
Anyone having any question? Please raise it.
I will not deal with you any of the procedures for professional misconduct. If anybody has any questions on the procedures for professional misconduct, you can ask me now.
Friends can unmute and ask questions.
Can you just briefly mention, in your own experience, what are the cases which is normally coming before disciplinary committee for professional misconduct? Very briefly, you can.
There's no link between one and the other. The cases which are coming from the discipline committee are of various natures, of not examining the documents, of not applying one's own mind, of not compliance with the specific standards, of not compliance with the standards relating to material misstatements, of not compliance with various other laws. We came across one particular case where they said that the shares have been transferred from one shareholder to the other shareholder, and that transfer was not permissible. And the auditor had signed and attested the annual returns. So in doing so, they had also confirmed that all the parameters for transfer had been appropriately taken care of. And that essentially involved a particular matter where the shares had not been, there had been a transmission of shares through a gift. And that was a totally different matter altogether. It didn't affect the regular audit here, but it reflected something else, and the chartered accountant had uploaded the annual return and had verified that. So that was an issue which was very, very specific, very particular. That issue came up, and that was a matter which was very, very specific. And one of the things that I regularly experience when the matters come up is that the written representations are not always ready in the manner that they should be ready with the firms. So keep your before you sign your audit report, no matter how good you have a relationship with everybody. Even I have very good relationships with my clients. That's all very fine. We all need to have good relationships. We are working together. But then whatever representations are required to be taken from them, please take those representations. Please put them on record. There is one particular matter which came up that you signed the audit report, say, what's the date today? Today is the 19th, right? 19th of June. You signed this audit report, which is on 19th of June. You say that you relied on a piece of audit evidence. Audit evidence is what they're talking of. Audit evidence is the key factor. It's all coming back to that story of documentation. And that document has gone to you on email on 20th of June, actually just one day late. It's gone to it. So that means on 19th of June, you did not have this audit evidence. You are saying that you are justifying your professional judgment based on what is becoming evident by this particular piece of document. That document was not with you on 19th of June. How did you rely on it? The person says, sir, we finalized it. They just said that I told them that I want this representation in writing, this explanation we discussed. And they said, we will give it to you after discussions. We will give this complete explanation. And based on that, I signed it. They said, but you did not have it before you signed it. So many times we take the documentation just a day later. Now here, if he would have been, and today is the world of electronic transmission. So in those days, the document used to come in hand. So it would go in the file. I'm not saying we say lies, but the point is it would not be documented when it came. Here it comes, and the man very honestly showed them the email, sir, here is the document. I relied on this. They said the document is not with you on that particular day. The document is not signed with you on that particular day. Charge, sir. Charge for professional misconduct. And then we had to argue. We are still arguing that matter at the higher forum. We are still arguing that you have to look into the practicalities of the profession. We are giving you proof that this meeting took place. In the meetings, all the matters are sorted out. And then there is a requirement that all the matters which come up for discussions, which could lead to qualification in the auditor's report in terms of SS 701, 705 and all of that. Now, all those matters which are there, how did you deal with them? How did you drop them? How did they suddenly get dropped? Document it. You see, what happens is we go and discuss. We get satisfied, okay, this is all right, so this qualification will not go. This qualification will not go. Now, of course, we have got key audit matters also. Now we have got the standard of key audit matters also. This will go as a key audit matter or this will not go as a key audit matter. This is it. We take a decision. But the point is, how did it get dropped? You need to document it. And where there is a quality control reviewer, how did the quality control reviewer satisfy himself that they had been dropped for right reasons? Document that. So you may have heard this very often, that what is so different in the bigger firms, that their documentation strategies are very different. That's a fact. That's the fact. We need to have, I'm saying time and again, a lot of cases which come to me of small and medium level firms, we could have sorted it out in the favor of our, medium and medium level practitioners and small level practitioner firms if we had the documentation. And the documentation is often lacking. These are just examples, 2 examples which I gave you. It's a daily example. You sign today, the document comes tomorrow. You've discussed it today. They said we are giving it. And that the evening it was made, you signed, they said, okay, sir, we are sending it. And they sent you the email later on. So what do you do?
So there is one question. Our members receives money from clients for remitting the taxes on behalf of the client. Is it?
That's okay.
It's okay.
That's okay. Put it in your bank account. Put
Put
the money in your bank account. Pay the taxes, and that's okay. It should be spent for that particular purpose. There should be pie-to-pie matching.
Okay.
There should be a pie-to-pie matching.
Any more questions, please? I think
No more questions.
it will take time, sir. So I think it was a wonderful presentation. I think for my part, I think I personally was desiring to have you here physically to take a class, but unfortunately, it all happened because of Corona. But it doesn't matter. If after the Corona, if everything goes well, I think still there is a chance of physical meeting. Definitely, we will we secure presence here on that day if it is if everything goes well. I hope you won't have any other problem to be here with us and for any session or definitely, and we look forward it.
Such a pleasure. I'm looking forward to getting out of Kolkata. I'm stuck up in my home for 3 months. And first I'm looking after to getting out of home, then I'm looking up to getting out of Kolkata. So sure, why not? I hope things get normal. We all start moving. Thank you.
It was a wonderful session. Really, thank you. Because the moment I called you and asked you, I think you were ready for this session because that is because your willingness to come forward and to share with you whatever knowledge you are having with the members here. Thank you, sir. Thank you very much. And now I request Joss, Secretary, for formal vote of thanks and announcements. Meanwhile, I think one of the member was asking the question whether you'll share the presentation, sir. I think he was asking the question.
To you, you could give it to anybody. You see, I did not make this as a fancy presentation because yes, this is a topic which really concerns us. So I've really brought in those clauses here. It's not this is not the type of presentations that I usually do, where I keep the words very limited, just few words, pictures and stuff like that, or diagrams. But this is something which is so serious that I kept the words as they are, did not want to dilute the importance. So basically, it's like a summarization of the code. But if you want, I will send it to you. You could distribute.
Right. Over to Jose, please.
Thank you, CA Arvinder Pal Singh. We call AP Singh. Thank you very much. Actually, our profession, the others, the stakeholders, government, they are looking, very much from us. If we look at the history of our institute, it is set up by the Act of Parliament in 1949, before the India became republic. So that much the importance the government is given to us, to the accountant, especially the chartered accountants. So we must have integrity and ethics, and our institute is coming with a new code of ethics. Of course, the chartered account should be straightforward, honest, fair in performing our professional services. Thank you very much for your explanation on various sections and SQC1 and various sections of company law, CA Act, Code of Ethics. Thank you very much, sir. On behalf of Ernakulam branch of SIRC of ICAI and all the assemblage here in this meeting, I extend a sincere gratitude to you, sir. Thank you very much. The managing committee thanks to all the participants for the active participation in this virtual meeting. There are few announcements.